26th June, Monday. So day name given is fading trading range day. So today is the trading range day. So best approach or idea for the trades is to trade for fading approach. So this is the flow of the presentation. So we'll go through weekly daily chart. Then we discuss general view where we discuss the major trades of the day, swing trades of the day. Then we go for tick by tick all bar analysis. Okay. Then our uh, scenario for trading is to go for two approach. So we are considering it all in all day structure. Okay. So one way of trade where we are finding uh, similar patterns, like if we are trading for wedge, so we finding in everyday structure wedge pattern. Another approach is for midday approach. So whenever price comes to midday, so we will trade it for it. So here we are discussing these two methods deeply, and we are finding trades how we can trade it in um, at least everyday structure. Okay, so let's go for weekly approach. So this is the daily chart. Okay, so last 2 days, Thursday and Friday, are bear bar are there. Last week low is somewhere here. So we are opening gap up and testing that low, and this is the inside bull bar. We are closing here. If we consider every week bar, so in every week we are trying to go above the uh, this high, but at the end of the week we are selling, we are seeing some selling pressure, like these two are selling pressure are there. Okay, opening of the week one day where we have also bear bar, so price not able to close above that. So this last week also sort of inside bar. If we consider hourly time frame, so this today all bars are side bars, overlapping bars are mainly. If you look, there is a micro channel going on which break on Friday. So these two 60-minute bear bar are there. So somewhat we tested today this trend line, bottom of the this bull channel, and again we see low of the day, and buyers have faded it, and we closed at the somewhat midpoint. Okay, so 23 point plus somewhat is that, yeah, 25 point plus. Okay, so let's go for general view. So here are mainly if you participated in any ongoing channel, so you, if you manage well, then you traded well. Okay, so here if you see, I will discuss opening opening trade. Okay, in brief review. Here we good trades are selling this good looking bear bar breakout to the EMA. If we sold here, we can book profit here. Scaling approach, again go in here. So this is the looks like bear's move. If you notice here that this bull bar, it looks like itself exhausted mode. Okay, I have also examples are there. If you see, here is the one example is that this bull bar creating channel afterwards. Okay, but this bull bar is itself exhausted mode, so there is no this type of bull bar in saying ahead of here. Okay, so here is the also fading approach is traded. Okay, so if you see, I have also two or more example like that. Okay, so we will discuss in end of the video. Same view goes on this bear bar. Uh, by looking at this bear bar range, it looks like we sellers are exhausted in that. Okay, so they will only go for measured move. They unable to create channel here. Okay, so if you consider to go high of the days or low of the days or somewhat 50-60 point really, then uh, creating channel is the main approach. Okay, if anyone is there. Okay, so here if you look, these two moves are itself 712 660, so 40 bars, 40 rupees bar, this two pair bar. So at the end, breakout to the lows, it pull back and faded by buyers. So buyers also have good approach, at least go for midpoint above the EMA, and then seller also faded it. Okay, so this is the good swing trade. In this buy channel, we can trade it for two-legged move. So if you bought anywhere this bull bar or even this bull bar, if you manage well, you can exit somewhat here after this looking bear bar. If you enter here, this is also good swing trade. Okay, after seeing this sidebars, if you consider it as a this bull bar or even this bull bar breakout to the EMA, if you traded it by managing SL to the low of the day, so it is also a good trades are there. Okay, so overall days of trading range day, so higher prices uh, giving opportunity for sellers. Okay, this or this, and lower prices which are L1 L2, this is the one point, this is the second point, are giving opportunities to uh, buyers. Okay, so let's go for tick by tick review. One more point to discuss is that after this good looking uh, beer bar, same structure happened on 8th June and 9th June. Okay, so I also noticed that. Let's go for little review for that day. Okay, 12th June. Okay, here is the day. So in this day also same happen. It's trading range day. I given its name as a bull day because every pullback is giving opportunities to buyers. If you see starting wedge pattern, okay, so buyers got entered here. They able to get three pushes up this bull bar, okay, and this bear bar. So it looks like it itself exhausted mode. Okay, they here if you notice that they are unable to get even measured move for upside. Okay, this is the measured move. They achieved a target somewhere here. So it is also doji bar in daily time frame. Okay, so giving opportunities to both side players. So every high it is faded by buyers and every low is faded by, okay, every high is faded by sellers and every low which is faded by buyers. Okay, so today is also doji candle. So somewhat like today also same happened that, okay, okay, so I am finding this bar counter. Okay, so every below bar, so there is number, so we can do easily. So I am considering here EMA of 20. Okay, so in my all analysis I go for 20 EMA in 5-minute time frame. Okay, okay, let's go for in first hour we are going for two trades. Okay, so one is for reversal opening reversal trade, and another is first bar close buy sell. Okay, so if you see yesterday's chart, let's go. uh, if you see first bar, our second approach is for first bar close buy or sell in that direction. Okay, so this is the bear bar, so we are selling it on first bar. So target of the uh, day, or target of for that position is at least minimum for measured move. So if you see after selling first bar, we are targeting for measured move. Okay, so this is the uh, profit scenario. Here is the also we will discuss today's chart. Let me go through another day. Okay, here is the, if we consider 22 June. So if you selling here at first bar, okay, this is the first bear bar. If you some selling here, so after seeing these two bull bar, you are disappointed. So you have to trade as possible minimum position. So no worries are there by after taking trade. No tension, no emotional, any. Okay. So you go for one half or even one third position of the your total position. After doing this, you can view for scaling approach. Okay, so if you notice here that first bear bar, if you sold on, so after seeing this second and third bull bar, this fourth, which is the bear bar, pull back from day's high, so you go again for short here. This is the scaling approach. So you book profit around here. If anyone sold ninth bar, okay, bear bar, so they can again go for scaling approach somewhere here at 13th bar, 15th bar, even 18th bar by considering this high, okay, this day's high. So you can manage well. Okay, this is the scenario of first candle close by sell. This is also same happen. This candle is acting as an exhausted mode. So here if you see second bear bar, and they even not able to create measured move for this candle. Okay, so sellers have faded it. Okay, so if anyone sold here after seeing this bear bar, so they can go scaling here or in this uh, price action mode. So they can go for this micro channel, participate in big bear micro channel. Okay, another approach is for opening reversal trade. So where we are finding, look, this is the best scenario for first bar close and also best scenario for opening reversal mode. In opening reversal, we are finding opposite mode, opposite uh, bar, which itself good looking. So this is the bull bar. If anyone bought here, okay, so he can again scale in for at seventh bar, which is the good looking bull bar. So it act as a reversal candle. So even anyone not entered anywhere here, he can go in at seventh bar and go for channel or at least measured move. So if you see here, can achieve measured move. Okay, so there is also many examples are there. This is the good opening reversal trade. Okay, if you consider three bear bars are there. First leg somewhere fourth low, second leg at 16th low. So if you traded fifth bar considering SL here, so after seeing this bear bars, if you exited in this bull position, you can again go at 18th bull bar. You can again go for buying position. You buy here, put your SL to here. Even you, if you have exited somewhat here, you can go with two size position, because this mode is exhausted, sellers mode is exhausted, opening reversal trade. Okay, so same scenario happened today. Let's go for first opening reversal mode. So let's go for first bar buy close. So first bar is bear bar. Okay, if you see, if you sold here first bar, so after seeing two, third, fourth, three consecutive bull bar, either you exit your position or go for scaling approach. If you traded very small, that you can go for scaling approach, so you scaling at fifth bar. Okay, this is the best idea to trade and exit somewhere here. Okay, so first bar, which is the bear bar, second bar is reversal bar, bull bar. So many traders are trading for opening reversal candle. I like to trade opening reversal mode. So this is the second bar. You can buy here and put your SL here. If pullback going on, or if any seller candle going on, so we go for approach for scaling approach. So third bar, which is the bull bar, consecutive to this second bar, we giving breakout to the EMA. Fourth bar, which is the total three consecutive bull bars are there, so buyers are in profit now. Okay, but these bull bars are acting very large, so I consider it as a exhausted mode. Either we go for somewhat channel here and then we reverse it from there. Okay, in this type of structure. But if you see that fifth bar, which is the good looking bear bar, so if momentum goes on, their channel will be not possible to going on. Okay, they only try for one first leg and second leg, because this is the faded by sellers and this is the cool looking bear bar. So sixth bar, which is the bull bar, uh, seventh bar consecutive bull bar, but not able to get momentum above here, so it's considered as a second leg. Okay, so this is the second leg going on. Eighth candle, which is the faded by sellers, so it is giving breakout to the EMA. So anyone who sellers are sold here fifth candle, even after seeing eighth candle, they can go for scaling approach. Okay, they somewhere here book profit here. So this is the measured move we are getting on downside. Okay, eighth bar, so which is the good looking bear bar, so close on sell. Okay, ninth bar consecutive to same size of this bear bar, so I consider also as a exhausted mode. So this bear channel is not going to sustain very large. Okay, this is the sign for these two bars are there. It means that this is the vacuum for prices. Okay, it shows that if these large size bars are there and it's going somewhere from top to bottom, then it consider as a vacuum to the up or downside. In this structure, at the top of the day, fading approach is going on, and because it is the trading range. Okay, so more probability of price stay in the range. This is the range of the day, so midpoint where price attracts. Okay, so the price go above this, they will fade it, opposite player. If price go below this, opposite player faded it. Okay, 10th bar, which is the doji bar, consider as a always in position short side. Okay, so if anyone sold here 8th bar or even 9th bar, they can stay in. 11th, which is the good looking bull bar, which is also reversal to the breakout to the low. 12th, 13th, 14th are considered as a micro channel or even flag pattern. Okay, this bull move is not very strong, not able to create high, at least close on high bull bar, faded by sellers here on 15th bar. Okay, so whoever traded 8th bar, 9th bar or even 10th bar, they can go scaling at 15th bar. What they aim is to trade for 15 is to that whenever price come to original level, so they can exit this position at break even and this position in little profit. That is the aim for trade. Okay, so whoever sellers traded it, they exited at 18 to 20 candle. Okay, now this is the not good looking second leg. 19th, which is the bull bar. So if prices want to go below it, so this 18th bar will be of large bar. We are not able to create it. Okay, so buyers trying to buy at this level. So 20 bars, which is the bear bar, going for below it, but not able to create a good looking bear bar. 21 bar, which is faded by buyers. Okay, so anyone who buying here, they can again go for scaling at 21 bar. Good looking bull bar closing on its high. 22 consecutive follow through. 23 and 24th are flag pattern in this. Okay, price trying to break above EMA. This is the little pullback to EMA breakout. After seeing 25th bar, they can scaling here. Okay, if they have bought here, or even fresh position can be created here, because chances of uh, somewhat channel is very high. Okay, if you see. So if you consider as it as also first leg, so we are going for second leg. Okay, so here the buyers able to create channel 27, 28, 29, 20 up to 29. This is the micro channel. It's considered as a second leg. This is the first leg, this is the second leg. If you notice here that momentum is not going on. 30, which is the bear buy, faded by sellers. Okay, so 31 to 35, if you notice here, this is the sidebars. Oh, sort of dojis. So buying momentum is not going on. So if buying momentum is not going on, there is chances that sellers will fade it. Okay, so 36, which is the bull bar, trying to go above it, but where it not got follow through. Okay, 37 and 38, which is are not good follow through for this bull bar. 40, 39 and 40, which is the 2 bar reversal mode. Okay, if you consider it as a H1 here, you consider H2 here, there is more reason to sort here, like H2, 3 pushes, first push, second push, third push, short. Okay, sort of wedge pattern created here. Try to at least go for is low, or check the price action below EMA. Okay, EMA gap is also main reason. So sorting 40th close is also good approach. I somewhat sold here. Okay, 41, which is the inside bar, tried to break below EMA, not able to. So after seeing 41 bar, what you can do is you can place your SL to somewhat here. Okay, 42, which is the bear bar. 42 to 46 are consecutive bears bar are there. Brought prices to the low of the day. So at the low of the day, uh, buyers have faded it. Okay, 48 bar, which is the good looking bull bar, closing on its high. So it's a reversal bar. So this is the channel creating, bear channel creating. Okay, this is the high of the top of the channel. So by seeing this, uh, we can assume that this bear channel is not strong enough. Both side participants are actively active here. Okay, if you see, buyers are also going for two-legged move, sellers are also going for two-legged move. Here after this selling pressure, also buyers got entered and at least go for measured move. So for 50 up to 51, this is the micro channel for bulls. It tried to break above EMA, not able to. So this is the considered as a flag pattern. Anyone sold at 47th bar, they can again go at 52 bar. This is the consecutive bar. No reason to go out from this selling position. Okay, you can move SL to every uh, good looking bear bar above bear bar. So this is the placing of stop loss. If you traded here, This is the places of good stop loss. I exited exactly somewhat low of the day. Okay, 56 bar, which is the bear bar, act as a exhauster mode. If you also see that this is the micro channel, this is the largest bar, uh, act as a exhausted last bar faded by buyers to this is also 2 bar reversal. So now 57 considered as a reversal bar if it got followed through. Okay, so chances of going to this vacuum level is also high. So 57, 58, 59 are 3 bull bar. Okay, so it got good follow through at 59, which tried to break above EMA. 59, which is the bear bar. 61. Okay, now if you see closely, this is the sidebars format. Okay, so if you buying at 57, so what you goal is to at least achieve this type of measured move target. If you selling this 60-month candle, okay, so at least go for the measured move target. But after saying this, main idea to clear is that we are not going for trending downside. Okay, so this is not going to happen. At least clear that. Okay, so after seeing this 61, now sellers have considered it as a if they got followed through, they can go for measured move somewhere here. Okay, but very next bar, this is the 62 bar bull bar. Now probability of going upside is high because they not got follow through or consecutive bear bars. Okay, this is the reversal pattern. I will discuss later. I have also considered many example here. So buying above 62, considering SL of this or low of the day is the right approach. Okay, so if you traded anywhere here for buying position, okay, if you traded 58 or even traded 51, considering this channel will go on upside, so you go for scaling at 59th position, even 62 position go for scaling approach. Okay, also discussing that if you sold anyone 56th bar, you can scale in at 60 bar and you can exit at somewhere 61. Look, why I'm considering scaling approach, because prices are gone against you. Okay, so protecting your capital is the right approach to it. You forgot your profit scenario or profit momentum. Just exit at break even prices. Okay, it is the aim of that situation. So if you sold 56 after seeing these 3 consecutive bull bars, your main is to exit at break even prices. Okay, so you go again short at 60th position and 61 where all the sellers are exited here. 62 bull bar buying on close. It got 3 consecutive bull bars, so chances of prices will never go turning back to here is high. Okay, 65 and 66 are bear bar. 2 consecutive bear bars are there, sort of creating pullback from this range. Very next bar 67 given breakout to the EMA. So again, anyone not traded here can go for it. If you okay, I will discuss that later. 67, which is the okay, 68, 69 are not good follow through. Price go below it, try to go below 70 bar. Now, one approach is for trade for is that you can also trade it for uh, stop order above high of the this range. Okay, if price is going like a triangular pattern, so main idea is to trade here for stop order above the top range. So if you traded here on 17th candle, okay, if you entered on 67th or somewhere participated in 68, 69, okay, by putting SL here is for good position. So this is the 70, which is the bull bar, act as a self-exhausted mode. If you see here, we are able to create measured move target. So this is the midpoint. Anyone entered here can approach for target up to this point. 60 71, which is the bear bar, which is the signal for selling opening reversal candle. 72 73 are three consecutive bear bars are there. Okay, so anyone sold at 71, he can go for scalp up to measured move target, which is the 73. Okay, here main idea is to going for position is for uh, fading approach, and trading range where buying at low and selling at high is the best way. Okay, in this type of day structure you can scale in at good points. Okay, so if you bought at 11 bar, you can again go at 21 bar. You somewhere here you can exit at good position. Okay, if you also bought at 39th bar, okay, so you also scale in at 48 bar. This is the, if you see, this is the exactly 50-point retracement. Okay, so you can exit anywhere here. If you anywhere traded here, okay, 51th bar, let's consider 51th high, you can go for scaling at 56, even more at 62. Okay, in this trading range, you trade very small size, okay, and go for approach for scaling approach. Okay, this is the main idea to trade here. Let's go for one way of trade, all day structure. So let's go for Friday's chart. So in this we are considering two approach, wedge pattern and midday approach. In wedge pattern we are finding wedge like this, where they have three pushes, at least two or three pushes to the downside. Okay, this is the two leg approach. So first push and second push, price is not going below it, so buying here is the way of trade to here. Okay, so if you see, there are lots of wedge patterns are here. Major looking wedge pattern is here. It is easy to identify. Okay, midday approach is another approach where we are uh, go for at least prices to come to the midpoint. Okay, if you consider days range like this, so at midpoint we are trading for it. So here one way of trading is to, if this is the buying channel going on, okay, this is the buying channel going on, this is the H1 H2, so you can participate at any bull bar. Okay, put your SL to long here. After seeing this bar, you can trade any breakout bar, okay, or breakout to the EMA or good looking bull bar. You go for approach for scaling, so you can scale in here, or even you can create also fresh position at this bull bar. You can achieve target up to here. This is the measured move, low of the point, this is the mid of the point, and high of the point. Okay, if you consider today's chart, so there is the wedge pattern at top, but in it is in micro time, so we don't consider it. This is the sort of doji pattern, wedge pattern is there. So this high for two pushes are there. Okay, so you can buy it here. This is the reversal trade. You can also trade well here because this is the three pushes wedge pattern. This is the first leg. Okay, so creating somewhere like this. This is the breakout to the uh, wedge pattern, so you can trade as well. Okay, so if you see in major time frame, so this is considered as a wedge pattern. If you see one, two, three pushes are there, and its momentum is not going uh, like this. Okay, you can trade as well as there here, because the probability of going downside is not very good by considering this pull bar. So buyers able to get at least measured move, faded move considered as a faded move. Okay, this is also a main good example of midday approach. Breakout to the EMA, you go for breakout to the EMA trade. This is the trade. Okay, you put your SL here, at least can go for measured move target. Okay, in this daylight structure, we can't hope for at least 3x or 2x uh, reward. Okay, you can trade it for measured move. In trendy market, we can go for 2x 3x reward. Here if you see, if you traded here, okay, this bull bar, then you can get 2x reward. If you traded this bear bar, you can trade it. This is the fading approach. Okay, so I sold here and I exited here. Then again I created position this bear bar, but it faded by buyer. So I at this price EMA I exited here. Okay, so you can trade it well if you consider lows and high of the trade, or if you find vacuum. Okay, in chart. Also, we are considering days like structure. Okay, let's go for it. So if you see here, this is the uh, bull bar. So after seeing these 2 or 3 bull bar, I also consider it that it will be faded move. Okay, fed by sellers, and we go for days low. So this is the one example that faded by sellers at the top of the range and get good range below EMA. Okay, so this is a after day. It also create expanding triangle. Every breakout is faded by opposite players. Okay, so I considered that scenario. This is the scenario where we exactly got same structure H1 H2 H1 H2. These two candles looks like exhausted mode, so buyers can enter here, buyers same can enter here. Okay, price stays above it, but here if you see, there is good looking bull bars are there and even consecutive bull bars are there. Sellers have no consecutive bear bars except this try to touch EMA and got faded by buyers. If you notice here that there is no good looking bull bars are there, if bull bar are coming, then it is faded by sellers. So going for selling here is also a right approach. Next chart is okay. This is the 15-minute. Okay, I also consider this as a okay. If you see 3 bull bars are there, then market reversed from top, broke the low and able to create low channel of the day, channel for bear. Okay, but here we see that there is no ongoing channel is here. Okay, no got followed through like this below EMA. So price immediately go above the EMA. So also considering bear day is not good. Okay, trending bear day. Okay, this is the another trade. If you see here this EMA breakout and EMA breakout, it looks like same. Here probability of buying is no more exit after this seeing 2 consecutive bear bar. So here also same happen. You can go for short here, at least break to the low of the day. Okay, same approach here. Here also EMA gap short, so you can find similar trades. This is also one example. Okay. So here are the bear day. Okay, so here same structure. These 3 consecutive bull bars faded by sellers, 2 consecutive bear bars. Then able to create bear channel. This is the bear channel. First push, second push, third push are there. Okay, then buyers have faded it. The same looks happen here, but we got uh, L1 L2. This is the third push, first push, second push, third push, and faded by sellers. Okay, same structure is like that. Here also same is that uh, opening wedge pattern for buyers. Sellers have faded it go up to measured move for bear channel. This bear channel in major time frame looks good. Faded for buyers. Buyers at least go for first leg and second leg and measure move target above the EMA. Okay. So this is also similar structure. This is the exhausted move structure. Like these three candles are good looking, closing on its low or high. So act as a exhausted move this bull bar. So I immediately considered it as an exhausted move. So we can trade it for faded move. So if you see they are not unable to get channel further high. So faded by sellers, this breakout to the EMA. Also same happen here. Sellers able to get range for downside. This is the good looking range. Same uh, bear day. So if you notice here that at the midpoint, they are not unable to go above EMA. So here if you see there are price action going above it. So it acts like two-sided move. Here buyers not faded the selling channel. Today's move is faded by buyers. Okay, so this selling, every pressure selling is exhausted move, and at every low buyers are present. So every breakout is uh, bought by buyers. Okay, if you see here, this is also same structure. Both charts are looking same. So L1, L2, and buying channel is there. Okay, this is also structure where triangle pattern is going on, or somewhat wedge pattern is going on. Price not able to go above EMA, even not got follow through or good looking bull bar above EMA. So sellers have faded it. Okay. Here also good opportunities for EMA breakout, EMA gap, midpoint approach, 2 bar reversal, same like today's happen. Okay. Here is also one more example that after this uh, good looking bear bar, so we can get at least channel 3 pushes down. So here they are able to create channel faded by buyers. Buyers move this is not looks very strong. Exactly same today happen. They are gaining consecutive bars but not strong enough. If sellers will try to, if they got consecutive bear bars, so then totally this move is faded. Okay, if you see these two bear bars are able to convince traders that always in position is for downside. Okay, here is also same approach. These three price action bars converted many sellers to go in at these higher prices. Okay, okay, so good looking trading range day. Bear channel is there. Okay, so go best idea for trade to go for opening reversal trade at starting hour. Find wedge pattern like this and fade it. Okay, from midpoint you can also get good uh, moves like a breakout to the EMA. This is the breakout. If you traded any breakout to the EMA, like this is the breakout to the EMA you bought here. This is the breakout to the EMA you can sell here. This is also breakout to the bull bar. You can buy here. You can scale in here and able to get exit good profit. This is the breakout to the EMA. You can sold here, able to get good profit. You can also scale in here. Okay, this is the also many ways to trade here in trading range day. So if you also participated in channel, this is the bull channel. You can participate and manage well. This is the bear channel. You can participate and at least go for second leg. So you can exit somewhere here. If you participate also like H1 bought, if you bought H1 after seeing this price action, if you not even scale in here, you can exit at break even position after seeing this 2 bar reversal and you reverse your position. Okay, this is the micro channel. If you participated even also this or last bar, this is the last bar. Okay, you can scale in here, exit somewhere here. Also at the end of the last hour move, this is the measured good move. Okay, this is the reversal uh, pattern. So this is the bull move, flag pattern or pullback reversal, and which is for the high of the day. Okay, so good day. Also it has a range of, I forgot to tell. So good range are there if I consider from this. So 40-point range is there, 40 from top, 56. So total approx 90 from this to 130. Also this for 43. So 170 point, and this move as a 50 point. So 200 point overall range is there. Okay, if you consider buy sell buy sell buy sell, even if you participated any two, one or two channel, and if you go for scaling approach and manage well, then you can exit at good profit in days like of this structure as well. Okay, so okay, thank you.